It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday. Excuse me. At 11 o'clock till noon Eastern Time. Today I will also be finishing, I'll be doing, when I'm finished my show, at noon I will be doing Larry's show. So trade what you see. This is going to be a 2-hour show. So there's plenty of time to go through a bunch of things. And one of the things that I want to look at is that this E-mini, the December E-mini, has started a leg C in the 120-minute chart. And invariably when you get to the C, you should make the D, and the D will test the entire 275 area. 2075.25 is the all-time high that was made back at about just, I think, 1 o'clock, was it? Oh, no, 1715. That was at 5:15 after the close on the 26th of November. Slipped down to 2048.25, and we've run up now with a high today so far of 2072.25. Good comeback, left side, right side price time match. We're going to be looking at this and say there's a rotation going on. I really feel that it's actually a rotation, correction, leadership culmination, and laggard test. I'll explain it as we go on. We've got plenty of time, so here we go. Well, first of all, thank you to Steve for 2 great hours. Really a lot of information, a lot of technical information. That's what we're all about here at TFNN. So let me do this. I'm going to go to where would the first place be? The E-mini right now is up 575. There's a pattern that I've got you that says there's an arch formation that even if there's a breakout above 2075.25, excuse me, that arch formation should stay in place if there's a pullback within 3 days after the break to a new all-time high, or before that even. But if there's a break of this level right here, this is 2053 to 2048. Anytime in the next 3 to 4 sessions, if there's a break under that, we've made at least a short-term top. And I'm kind of looking for limited upside right now. You know, I've been talking about the Dow. Let's just go through it, right? Dow. The Dow is in leg. Let me just see. Did it make a new recovery high today? Did the Dow go to 17,894? Yep, it went to 17,905. So what we've got, oh, this is so interesting. What we've now got is a leg D. It did recycle. It's a leg D in the Dow daily. And that is a positive on the short term. And it says that was probably an instant restart, breakout to the upside. One of the reasons why the peak G didn't quite work here is because the stochastic at the close yesterday and the day, and even yesterday and the day before, when the 9-period differential went underneath the slower moving average. That red line there, you see the little green line is below it in the daily. Stochastic did pull back, but on balance, volume is actually still quite good. Relative strength is okay, but lagging. And the stochastic is okay, but lagging, but above 80%. And that is a good sign. In the 120-minute chart, we've got the rectangle formation. Remember I said the rectangle formation can stay in place for quite a while, longer than your patience. And we're going to watch how it breaks out, if it breaks out to the upside. Well, we've done that because the Dow right now is, in fact, this has to be leg A, B. This is leg C in the 120-minute chart, just like the E-minis are. Only difference is we're at all-time highs in the Dow. Dow's been leading. This is very interesting. A close below 17,740. Let's call it 17,700. In the next 3 to 5 sessions, we'd say, uh-oh, be careful, we've started a consolidation. I'm just calling it consolidation for now. Why? Because those weekly charts are still really strong. But look, there's that inside wedge resistance. There's a little room to go there. It can still go to 17,990s, 80s. I'm suspecting that 18,000 level is going to be very strong resistance. That's just the way I'm looking at it. So we've taken appropriate action. Just to be careful. A couple of questions now. I do want to go through email questions I didn't finish yesterday. It's plenty of time, 2 hours today. So let's go to the next thing. That's the S&P. So down on the upside, 17,900s all the way to 17,990s. Very strong resistance. Could even have one pop over 18,000. I think that unlike 17,000 or even 16,000, 18 is going to be the millennium number that is going to be very, very, very strong resistance. I show the high for the Dow on 1121, Steve Rhodes says, being 1121. So 28 is 11,893. Oh, 17,894 was the high. So we've broken that. Oh, you're absolutely right. Oh, thank you, Steve. I did the same thing in my own work that I was doing last night, and then I completely forgot about it. Absolutely. So this is G/C, and I was looking for a G, but normally the MACD would have crossed negative after the G. This is now crossed negative, and we've already crossed negative, and now we get the G. So at this particular point, we're looking at, so thank you. I've got that, in fact, right here in my Dow that I show my subscribers every single day. Right there. That's correct. Right there. And I kept making the mistake. It's just a dumb mistake. 17,894 was the high of the 21st. Then we missed it by 1 point on the 28th. And then we, today, went to that G/C. And I've been talking about possible G in the Dow, and then we've got to be careful. We'll see. I mean, this is the way it is. Yeah, no problem. Just your wingman. Thank you. Yep, I used to play wing when I played soccer back in my youth. And those very rare occasions, since I was a high school athletic captain, even though I was very young, I was only 15, turning 16 when I was a senior. Because I was the school's athletic captain, the captain of the athletic team was also the captain of all the sports for the school. I was called upon to, little me, I was called upon to sub for cricket or tennis or whatever it was if there were people missing at any point, and I used to do that when I played rugby, because I was the fastest athlete in the school, not only in my age group but all the way to the Open, which is 19 and above, and I was running under 16. I played wing, and I was very rarely caught, because if you got caught in rugby, and you got to be put in that scrum, it was not a very pleasant situation. So I ran really quickly. So anyway, so you're my wingman. Good. So now what we're looking at is at the S&P. Now let's go to the S&P. So we're done with the Dow for now. The S&P is also acting okay, but not acting as well as the Dow. Funnily enough, the Dow and the IWM, we'll get to that, are acting very well. But the S&P is lagging, the New York Stock Exchange is lagging. So the S&P is 2,075.76 as its peak D high back on the 28th of November. It hasn't gotten there. It didn't get there yesterday, it didn't get there today. And it got that really deep correction 3 days ago when the Dow, in fact, was holding up the market. That's partly because it had some of the integrated oils like Exxon and Chevron. So now look at this. The S&P is bumping also up against this resistance. And I must tell you that regardless of all the negatives that I'm looking at, I have to go with this, and I have to say there's a really good chance that this really is a brand new leg A in the weekly chart, and that says no matter what happens, we should not break under 1820.66, the low of October the 15th, until we've completed an entire peak B, peak C, peak D. So let's see. So that and the monthly chart, there's no signs. Oh, I had a couple of questions from subscribers. One in particular was, why would you want to play the volatility index when you haven't got any real big signs that you've been talking about anyway in either the weekly or the monthly? And the answer is, this is the rudder. You can't get a pullback in the weekly and monthly charts until you get it in the daily. And I'm just trying my best, using my techniques to time the daily appropriately to be able to get some kind of leverage and try to time the top tick. Sometimes it works, sometimes it doesn't. We've done it before in a number of instances using the Chapman wave methodology. I have no idea if it's going to work, but we're doing our best. So, yes, I do that for that reason. It's not one of my favorite instruments to use. You really have to time it perfectly, and you certainly can't hold it after the bad news is done with, because volatility just spirals lower, not upward, when it's done with being worrying. So now here's the other thing. In the S&P, the support level to watch is in the next 3 to 4 sessions, a close under 250, I'm going to call it 248. That's very far down, 22 points, 248. Did I say 48? I did. Yeah, 248. That's underneath the low of the Monday. Underneath 2049.57, 2048. So it gives it all back. And believe me, what's missing here is not that I haven't got many of the technicals in place for a reversal. What's missing is that I do not have bad news. But you remember January, I'm not comparing it, I'm just saying, you remember January of 2000, mid-January? There was actually very good news when we got the sell signals in the Dow. When I got that peak D top, I think it was. So all I can say is we'll go through this and we'll just do step by step. Now, so S&P 2048, break under that in the next week. Let's call it a week. Not good at all. A break above 2082. Is it 2082? Yeah, 2082 gets you right to the top of that line of the inside track. It's actually an up channel. In the weekly chart, let me just get rid of this. There's absolutely no need to have this now. We'll put it back in when we need it. This is just a major support level. We'll even take that one out. Why not? Okay, so we've got a break coming up, and I'm going to follow up with all of these things. And as we go out, I'd just like to look at the dollar and show you something very interesting. Look at the dollar. Spirals up. It goes leg, body, neck. I don't know if that was a beacon. This is a restart, but this is leg G/C in the daily. Hey, very strong. I'll be right back. Basil Chapman, Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see a host's charts and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman. Dow's down 2. S&P is up 3.30. What I said to my subscribers on my opening call this morning in my overview and market today section is that I'm anticipating that the best case scenario is some kind of a doji candle, mixed market close, but I'm actually expecting a down final hour. We'll see what happens. Day's young. So the dollar has got almost a 1-to-1 to the upside. I think there's a little bit more room left to the upside, and then we're going to get a test, and that test might come. 120-minute chart is A, B. Is that a C? It's really close. C. So it too is waiting for A, B. Yep, A, B, C, D. So it needs a D, and it's at a C right now. And the technicals are very good, but a little bit overboard. So that's that. And 88.22 will be the index. 88.22 to 88 will be the key support on the downside. And as I'm looking at it, 89.30-ish, mid-89s, that's going to be very strong resistance, at least at this point. Okay, now let's go on. QQQ series. The QQQ series, peak F/B, everything about the technicals suggests that there was a peak E in the 120-minute chart, and that the Qs in a very short term, near term I will call it, that's within 2 days or so, has made some kind of a top, and that'll become a short-term top if the Qs go underneath 104, 0.06. Let's call it 104. Close underneath 104, and we're in. It's at that resistance area in the weekly chart, that up channel. Chapman wave inside track, going to reverse most probably. I'm not watching it really closely. Let me also jump to a question that had Basil. It was, let's see, Travis asked, Basil, I know we were long last week in Amazon for peak D trade in the daily chart. Great call, by the way. I'm really warming up to the idea that this stock is going to really run higher into year end, but wanted to see where we should start getting back in. If you don't get a chance to email me back, maybe you can discuss a plan for your show tomorrow. This was last night that I got it. Thanks again. So I've got a peak D. I'm looking at this real closely, and if Amazon had not pulled back under the 200-period moving average. In fact, if it hadn't pulled back underneath from the 341.26 peak D, if it hadn't pulled back under 330, but in fact right now was trading within 5 points of that high, I'd say, wow, we have a really exciting couple of weeks going in, because Amazon might have turned the corner. But everything about that monthly chart is saying this week, right now, the week we're in, is so important that if instead of pushing into the 340, let's go to 343, 347 area. Instead of pushing into that area, it stalls here. This is the opportunity they would have, and it's not taking it. It's really negative action. The monthly chart has got a U-shaped pattern, which is now turning into a right shoulder failure pattern, Chapman wave right shoulder pattern. That is chapter 21, slide 362 in my CD introducing the Chapman wave methodology. And I spoke about this some time ago. I said that pattern that is so formidable of the H pattern, if Amazon isn't able to break above 349.38, the high of the 5th of September, the week of the 5th of September, to make another H that looks like an M, lowercase m pattern, then the pattern that would be the H with a cup formation, the two fighting patterns, will really get tested, because a close under 310-ish would just negate the weekly chart strength completely. So this is really important. I haven't wanted to touch Amazon on the long side since we took our profits. And to tell you the truth, looking at the 120-minute chart, I haven't updated it, but that's a peak D, and I don't like what's going on at all in Amazon. This is very disappointing. And it says that maybe people, I had spoken about this earlier. I spoke about the RTH, the retail index. Oh, not very good again today. And the XRT, I was asked about. Trying to rally, it's not doing well. It made a peak G. The RTH, the XRT is the SPY S&P retail. The RTH is the Market Vectors retail ETF. I have to tell you, something's going on in this chart that says it's getting very, very tired. So you can see one of the reasons why we wanted to do some shorting here is because we did add to the short position today, although we got taken out for a very tiny loss in 2 positions. So that's kind of upsetting. And at the same time, we'll see if the other one works. Now, let me just go on here. Oh, is that a break again? Wow, it's another break. Time is just flying, even though we've got 2 hours here. Time is flying. All right, I will be back, and I want to continue with both the indices and some of the questions. I've got more questions, and I've got questions in the debt. Very good questions in the debt. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and I'm just running through some of the questions. Okay. So, XLE, yes, it did spike a little higher. Getting a little tired. I'm watching this very closely. That magnet of the 200-period moving average in the weekly at 79.66. It's got to break and hold, and it's got to do it. I would say at least 2 weeks of pushing up towards the 85.62 9-period moving average in the weekly. That means it has to cross 83.26. Get into that gap, nicely into the gap, and has to do it real soon. So I'm watching the XLE so far. If you're still long, raise your stop on at least some part of the trade, because the weight of evidence is really pointing towards the downside in most of the indices. However, the 120-minute chart, as I recall, is acting quite nicely, and that's really giving you that impetus to walk the 9-period moving average with support at 81.39. It's at 81.94 right now, 81.91, the XLE. This is the S&P Energy Spider Fund. Next question was Pfizer. So I emailed back to my subscriber saying it needed leg D. and that was yesterday, because leg D at peak C at 31.64 on the 28th said that it should go at least a penny above it. Well, today, what did it do? It went to leg D. The stochastics at 83% and rising. MACD is still good. This is going to be a very interesting period because a lot of charts have done that exactly. Look at the IBB. The IBB, I needed to see a leg D in the 120-minute chart, and lo and behold, it got there and then it stopped dead in the channel inside track. Watching a lot of things here that, for us to continue, it looks like it's only 2.5, 3 weeks to go for the end of the year, and normally when you've passed September, October, if you're at all-time highs or recovery highs, you'd be looking at the chance of closing the year at or just under all-time highs. That's kind of, remember, December 31st of 2012. It's exactly what you did. I don't know how we're going to last that long, because unless they keep rotating on any pullback, they start to do the buying, and you just juggle around and mess around. So within a narrow trading range, we just managed to hold you until beginning of January, and then the market pulls back sharply. I don't know if we can do that, but we'll see. So let's go back to our looking at the indices. So now what we've got is the TLT, which is the Lehman 20-year T-bond fund, had a spectacular move about over a month ago up to the 127, almost 128 level, failed to hold and then pulled back. That was just the Fed response. Now what we're looking at is it's been walking the 9-period moving average, had a fabulous move up to 122.81 and gapped down 2 days ago, yesterday, and now it's forming the doji candle that says if that's not a reversal candle to get you back to at least 121.50, be careful. Because I still believe, I can't go to the chart right now. I think it'll be worth it if I do remember. I'll try. I've got Larry's show as well. Remind me, someone remind me about the triple yield chart. We'll look at it a little later on. I don't want to change anything right now. And we'll talk about it. I'll also talk about commodities in that hour. So now what we're looking at is Pfizer. So Pfizer now is in leg D. I don't have a signal at this particular point to say that there's going to be a sharp turnaround and there's going to be in fact, this whole thing here is really just Chapman wave stalk leg formation. It's a little extended, and that we've gone to the neck, and this is the head about to form, and the beak should take it back to at least test the 30.78 high. Was 70 cents, not a big deal. But what is a big deal is that the weekly chart is saying, you know what, I'm almost ready for a timeout. I'm almost ready to take a little bit of a breather to test the 30.32 9-period moving average. So if you're long Pfizer, I don't want to change your whole scheme and plan. I do want to say, if you're asking me what about Pfizer, I would say that if you've been long for a while, there's a potential right shoulder failure in Pfizer, as Merck has, in fact, done something different. It has actually tested its old high and made that peak D, and the weekly chart has gone to a B/G. It looks like a B. So all of this looks positive going out, but I would say to you, just in money management, I would say in Pfizer's case, you could take a little bit off if it slides under 30.98. What I'd say to you is, you know what, take a little bit off and be prepared to put that back on, depending on how it tests the 29s. If it goes higher, you're still in the position. I wouldn't just jump out. Now you have a choice. At 31.42, you can just say, hey, why wait those 45 cents? Take it off now, because that's like saying, will it move 45 cents higher? And at this particular point, I can see 30 cents above the previous of the high of the day. What is the high? 31.70. I can see it going to 32.30. But then I think it's going to hit a lot of resistance. Now, the all-time high is 32.96. So, yes, it could make the cup formation to go there. That's why I would prefer not to say to you, grab some money right now. I'd say, why don't you wait to see if it does pull back and then goes higher and retests the old high? It's going to have a lot of trouble at that level within half a point of that all-time high. So I don't want you to change it because of me, but if you ask my opinion, I would say to you, this is the extension move in the weekly chart that says, hey, take a little bit off, be prepared to put that same amount of money back in again later on at a lower price, save yourself $2 or something like that. That's just kind of the way I'm looking at it. But you're the one that's done the trade, so I'm recommending that think about the way you want to treat it, but right now I think that it's got at least from where it is right now, 31.42, it's got about a 1 point potential move to the upside, but a 2 to 3 point pullback if we do start to get a correction in the market. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing very well, Basil. How are you today?
I'm well, thank you.
I wanted to revisit Baidu, and my general question today would be in regards to it getting into that long-ranging bar that dates back to, I believe it's towards the end of October.
October, that very strong, powerful move to leg D on the 30th of October opens at 222.30, hits round number 222, spirals up to 237.55 and closes almost at the high. And then a continued higher before making a top, peak F top in the Chapman wave at 251.99. Now, if I recollect, if I'm correct about it, what we were looking at is that I'd said, I'm almost sure I said it, that we were looking at a test at some point of the 200-period moving average in the 120-minute chart, which was at 231, and it's right at 231 right now. But it's showing no signs of stopping. So the question...
Yeah, that's my question. I'm still holding my one, it's a March 250 put on that.
So you took some profit on one and you got the other, and that you're just holding. I'm going to recommend you keep holding it. The way it's looking right now, it's within 3 points, 228, 3 points of at least testing some trampoline support, having just broken. If it breaks underneath the 200-period moving average, you can expect a pullback under it. But then that 200-period moving average of 231.49 will become some kind of a magnet, and then a propellant for further move down. So I do think it's going to go lower in that bar. Whether it tests the low of 222, at this point I would suggest yes, it's going to, but when is the question? So I'm going to make the recommendation that you hold this. It's a pity you don't have two, because what I would have said, you could lower your stop to 232.10 on the put itself. So if it hits that, you get out of it. But what I would do is have a trading stop of 1 point from where it is right now. Just try to ride it down on one position, and the other position I would just say hold. But since you've only got the one position and you have a very nice gain, even though I see it going much further, you know that with options, the time to maximize your profit is when the premium is expanding, because it's showing no signs of changing the direction that it's in. And now you're seeing about the best premium you've had all the way through this particular downward run. So I'm going to suggest that we're getting really close to at least a temporary bounce. So think about what would happen if you took your profits now. Now you're moving almost 1 to 1, maybe 1 to 85.85 of the price itself, right? You're almost 1 to 1, but not quite. Am I right?
No, I agree with you. My gut's kind of telling me that take some profits. That's why I called you. But I there's nothing wrong with making money. So
yeah, you know, I think you've got such a good eye for this that I'm going to suggest, if it's my advice that you want to take, my advice is at this particular point, you've got a tremendous amount of the premium of the price right here. Could there be another 3 points? Yep, there could be another 3 points. But there's also the chance that there's a real quick bounce, and then you're going to see that premium shrink 3 points. So that'll be 6 points from what you thought. You know what I mean? So I'm going to suggest you think about it. Taking a profit is just not a bad thing. And my suggestion is that you think about reloading if it bounces to 235.
Yeah, that makes sense, exactly. So
Anyway, that's my thinking. Or the other thing to do is just have a little bit of a trading stop right now on the price. You can make it really tight. It's at 231.33. If you make your stop 231, it's going up. 231.55 or 231.63, and just trade it all the way through into the close. That you might be holding it into the close, and it closes at 228. I mean, that's another way to do it.
Yeah, it's been interesting price action on this thing. It seems like regardless what the NASDAQ's doing, on days when the NASDAQ's up, it's down. When the NASDAQ's down, obviously it's down. So,
okay, so that's my recommendation, okay?
All right, thank you very much, Basil.
Thank you, and congratulations. Fabulous move. Folks, I've got a real surprise here, surprise to me. We got Larry Pesavento on the phone. Larry, how are you?
Oh, Dr. Chapman, how are you today?
I'm well, thank you.
Listen, I'm not going to be able to make the show because I've got the persistent sore throat here, so I've got to rest.
You don't sound
tonight.
good. You don't sound good at all.
Okay. What I wanted to mention to our listeners that we talked about on Monday was the action that we'd had on Monday in the, it was Monday, yes. In the metals, we didn't have a increase in open interest in gold and silver or copper. In fact, there was a slight decrease, which is nothing more than short covering when you have that type of a move. It was just a few thousand contracts, but there was no big increase in open interest, so this whole thing could still be just a big short covering rally. However, if we can get gold above, $1,300 an ounce, which is a considerable amount, another $80 or so, then the picture could change a little bit. But I did want to alert the folks about the open interest. The volume picked up considerably. The volume was up about 25% over the previous week, but the open interest did not do anything. So there was no new buying coming in at that time.
So Larry, I've got a question for you, because I know that I heard you talking about a target on the downside of 14 in silver. It hit 14 and bounced really strongly. Beautiful call there. It's trading now at 16.49, but it's sort of stalled. So the candle what do you make of the candle that we have from 3 days ago on the 1st of December?
Well, Basil, we haven't seen a candle like that in 3.5 years. That was back in when silver was in the 49 range. We would get a $2 move, but coming from that low level like that, I don't think we've ever had a move. I can never remember one, not from that low level to see a. In fact, it was a $17,000 move. It was $5,000 down and $12,000 up.
Incredible.
And that was a period of about 8 hours. So it's really my partner in the hedge fund. He had an order setting it in silver, and he missed it by 2 cents. And of course, he was not there Sunday night when it first opened. He had the order there, and he missed the order by 2 cents. And he's still in therapy. I don't know how long it'll be.
To have something like that happen when you've spent your time doing all the homework, you do everything correctly, and it just fractionally misses. That's the height of frustration for sure.
$100 was a $12,000 move, but he got a little bit of the gold, so that was good. I just want to let you know what I saw in the open interest. So if anything happens, I'll certainly let you know. I hope to be on tomorrow. And keep up the great work, Basil. You do a AAA job for everybody.
Well, thank you very much, and I really hope your voice gets better real soon, because we miss you, and we would love to have you back tomorrow. So I'll be doing your show in the next hour. It's a pleasure, and thank you so much for calling, Larry.
Thank you, Basil. Bye-bye.
Bye-bye. So, folks, let's look at this. We've got the gold contract here. Look at this candle, this huge candle. Now, it's not the same Oops, we've got the break coming up. We've got a break coming up. I'll follow up a little bit on that, on the gold, but I'm going to do more of it in Larry's hour. In the meantime, I'm going to get back to some of the questions that we had as soon as I get back from the break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Well, folks, as I said before, I will be doing Trade What You See. I'll be doing Larry's show. Larry just called in. His throat doesn't sound very good. I hope he feels much better by tomorrow. So let's just do a couple of things here while we've got a moment. So though I've covered a chunk of the questions. Just want to review that again. Oh, I didn't even see that. Amber, AMBA. All right, a question on Amber, AMBA. Peak F top could have recycled. If it goes above 56.88, it's recycled. So far, I don't see anything wrong with it. And leg D in the daily and leg E in Amber is Amberella Inc. and it does something with a GoPro, one of those, I'm not sure. And little fundamentals there, the little that I know. And okay, so I've done those, and what I needed to do here is some questions in the den working. Let me go back to those questions from the beginning. So Amazon, we've done that. VRX is, I didn't finish VRX notation. I used to have these all notated. I've lost some of them. So peak C in the daily chart, it should go above 147.39, and that is Valiant Pharmaceuticals Inc., International Inc., and that's in the daily, still acting, walking the 9-period moving average. I would just say this, that if Valiant Pharmaceuticals, which is at peak C, if it goes above 147.39, I don't think it's going to go very much above, and then I think it should be pulling back. The key thing is that if VRX trading at 146.51 closes underneath 140.50 at any stage in the next week or so, then it's made at least a short-term top, and you can see the weekly, which is in leg C, almost a peak C. Nope. Yes. D, it's in a leg D. Watch that closely, because 136 would be the major support there. But the monthly chart says got the U-shaped pattern, and normally they do try to get to the top, and that's 153.10. I would not, if you're long, hold it long. I just say, you know what, if it breaks 140, take a little bit off. You can always put it back in, but you might have to wait a couple of weeks. So that's that. Looking for left side, right side price time match in VRX. Yeah, in the weekly chart, in the monthly chart, I agree. So in the weekly chart, that would be the same thing, and that would give it to the smallest candle. Yeah, that would say if it doesn't do it right now, it could take a couple of weeks before it retests, but it needs to do it by Monday. In fact, by Monday, it needs to be at the 153 area if it's going to be doing it at all. That's the left side, right side price time match. Next question I had. IFN. The IFN is the India index, so Indian market index. So I've got it in an E in the week. I used to have all of these guys notated. I seem to be losing them lately. So it's in D in the monthly chart. The monthly chart is still very strong. And that's one of the things I'm looking at here. Some of the markets are playing catch up, and in their playing of catch up here, their technicals have improved quite a bit. And if you look, even if I go to the FXI, which is the China market, even though it's not acting great, it's still been rallying, and as long as it's rallying in concert with us, even though it's not at recovery highs, it's a better sign than if it was going down, because what would happen is we started to pull back. These stocks would move very sharply, and the FXI is the iShares of the China large cap ETF. It used to be the 25, then it was always something Shenzhuan, I can't remember what it was called, it's called something else. Anyway. So now we're going to have a break, and it'll be a break of a few minutes. And I did tell my subscribers that I would be sending out, I just felt I wanted to send out an update at about 12:15 or so. So I'm going to work on it right now, and I'll be back for Larry's show, and I'll try to get that out earlier. I'm not sure we're going to make any changes at all. I just felt I needed to do that to see what's happening.
David White's newsletter, The Technology Insider, is focused like a laser